Friday, April 4th, market analysis, Stan Ehrlich. Good morning. We may be close to a bottom here. And I know two big, huge down days for obvious reasons. But I'm about to tell you a story about why I think we're very close to a bounce and a pretty good one. I'm not sure that it's going to be the lowest low for months to come. There's a chance of that, but let's take a look at the charts. All right. So this is the bigger picture for most of the indexes that I start out with, and then I go into futures and a couple of stocks. And we have dropped off very sharply, obviously, the last 2 days in particular. Today, we've almost duplicated the big drop that we had yesterday. And now we are definitely significantly oversold in most of the stock indexes. I think all of them. But look at where we came down to. Although we've broken all of the support levels and the lows since, well, for the last year, and this is the E-mini daily chart, and here's our current tick right near the low. We are also back to some support area based on rally highs around Christmas time 2021, a couple of few years ago. So around where we are, a little bit above and below, significantly below, there's a whole variety of support levels that are beginning to surface. We did hit a low in the indexes, and now we'll go to the 1 minute chart. Earlier this morning, about 8 o'clock, which was about 2 hours ago. We're almost 10 o'clock California time. And then there was a rally. Now we've come down relatively close to those lows a couple hours ago. If perchance these indexes hold in this ballpark, even a little bit lower low, but around where we are, and then start to get above that rally high that we had in the indexes on the average around 8:20 this morning, California time, then it's going to look like it's building some sort of a short-term bottom. The rally hasn't happened yet. I see the possibilities, gapping down, severe oversold situations, historical support levels, all add up to the possibility that we are ready to have a bounce. Again, I'm not sure that it's going to be the beginning of a bull move it's going to last for months and months, which is possible, but I need a little more time and see how the market's reacting to these price levels to say anything along those lines. But a bounce, yes. And it may last several days to a week, and it probably would be a pretty darn good bounce. I'm talking 30, 40 points, big points in the spider. So let's keep going. On the SPY, we gapped down yesterday and a big gap down again today. Gaps are almost always closed. They're kind of like a black hole in space. They tend to suck the price action back into it. So I am implying that this bounce could get all the way back up to 555 in the spider, SPY, which is well above yesterday's high. But remember, yesterday was from 6:30 to 1 o'clock California time and has nothing to do with the E-minis price range, which is much larger high, the highs anyway, the last 2 days. So we are now challenging with the spider the low that we made back in August of 24, almost exactly, very, very close, support, but not really proven that it's going to hold for very long yet. Again, I've got to see a rally that's stronger than the rally we had about 2 hours ago, and hopefully close above those levels, which is not really that far away, up above where we are now. The next stopping point on the downside would be something along the lines of 494. Another chunk down. Okay, 1 minute chart on the spider. Not bouncing yet, but I see the possibilities. And I wish I was making another recording after the close today, but I'm not going to do that. We'll find out on Monday. So what about the QQQ? Because it's like the SPY, only 6:30 to 1 o'clock California time. It does have two gaps also. And its low today is very close to its low that was on August 5th of last year. So, support. There are other support areas below that as well. So, if that support doesn't hold at about 423 for the QQQ, then we might be able to come down to 412, maybe even a little lower. That would be the next level support. From that level down, we begin to have a variety of longer term support areas. So I do think that the worst, quote unquote, is over. How close am I to the exact lows? Well, there's a chance that it happened a couple hours ago. So watch carefully here. All I need today is for a reasonably firm close near the high of the day. Since we're down about 25 S&P points or 250 on the E-mini, closing down 5 or 10 would be a very decent comeback. We'll see what happens. The QQQ, 1 minute. Then we go to the NASDAQ 24-hour futures contract. Well, 23 out of 24-hour futures contract. No gaps to close because it's only closed for 1 hour in the early afternoon California time. But it's crashed all the way back to a support area that, frankly, goes all the way back to lows that were made in January of 24, as well as highs that were made back in July of 23. And oversold conditions are in the teens. You take a look at the my custom RSI, and most of the time when we get down to where we are now, it turns around and bounces back up. I know these are unusual circumstances, but 53 years at this, I've lived through a lot of these weird ones. More recent was COVID, of course, going back to like the 87 crash, the bull markets in the Russian grain deal, 72, 73, and a variety of others. Subprime loan, 9/11. There's others, many others. So I have to say what I see. So I like this condition, severe oversold, some gaps to close above the market, historical support levels. We could be very close to a turn. It doesn't look like it at the moment, but when's the last time it looked like it? When you were at the low of the whole move and everything around you is going down, down, down. That's where markets start going up again. But recognizing it at the time is very tricky. I think there's a chance of that. Next, we have support levels in the YM, the Dow, on the break, very close to the lows again, April of 24, basically a year ago. And that low had proven to be a really good historical support level, fairly substantial. So again, extreme oversold, historical support, and the proper conditions for it to turn back up. It just hasn't started yet. I don't think. We're just super close to the low of the day. And even if it does make one more round of lows, if it's a really sharp crashing type of low, markets bottom out under those conditions. George Lane, Mr. Stochastic, taught me that 1970s and 80s. It's one of the techniques that stochastics was developed for, watching those crisscross percent K, percent D lines. Now look at the Russell. It also is extremely oversold, all of them, and back to a very profound historical support level where it bottomed out in October of 23. Too many support levels, too much oversold conditions, too many little telltale signs that maybe 90% plus of the break has happened. Maybe 100%. I just can't tell yet. Russell, 1 minute, minor head and shoulder bottom could form here. if we turn back up. If. Okay, what about the bonds? Yay, this is doing exactly what I had talked about. Classic breakout to the upside. Yesterday, most of the price action was above the neckline. Let me squeeze this back again here a little bit because I want to point out that we are now talking about an objective which is going to pull the trigger on another bigger formation that has an ultimate upside objective, probably take a more than a year from now, all the way up to 145-ish. So let's go back to the head and shoulder. The first shoulder is a little double bottom by itself last November. The head of the formation is a bullish engulfing ER buy signal smack dab at the bottom, January 14th of this year. And a little bit late timing wise, about 2 weeks late timing wise, but almost exactly what I had forecasted weeks ago. We bottomed out at 114.08, I believe it was, and I was talking about 114.11. Gee whiz, I missed by 3 ticks. But my timing was off about a couple of weeks. But since then, we have made the last shoulder, in my opinion, relatively quickly, rushed up, and now let's get a little detailed here. Rushed up to the neckline, which was just on Wednesday, touched it, and backed off. I thought that was going to give us some trouble because it was a bearish engulfing, but it did not. All of a sudden, yesterday, it gapped, it opened a lot higher. And the low of the day is right on the neckline, and 95% of the range of yesterday was above the neckline, closing above the neckline, and above previous rally highs for months since December. I call that a breakout of the head and shoulder neckline. Today, we do have a very substantial follow-through. Classic. Not only that, it's breaking above, staying above a resistance area as well. We might even have more of a move up on Monday, but this could be a minor high. From here, we could fiddle around sideways and or come back down toward, not necessarily all the way down, to 119 in small numbers, which is the neckline during next week, I'm going to say, and then new highs again. Now, the head and shoulder bottom has a minimum upside objective of 128, almost 129, but I repeat, that triggers off a much, much bigger move up to, I think, 145, I said. Now, what about the 10-year notes? They are just exactly the same. We have a double bottom in the notes. The only major difference is the notes second low on January 13th was very, very close to the same low prices that we had when I had a bullish engulfing at the bottom in October of 23. Much nicer looking double bottom. The last low, of course, is the head of a head and shoulder, like in bonds. The first shoulder was in November. Then we have the head of the formation in January of this year. And the last shoulder was just last week. And up you go to the neckline. Plus, we gapped across the neckline right out of a textbook. Classic breakout for head and shoulders, gapping above the neckline. I think it was 100% of the range yesterday was at or above the neckline, closing near its highs. Big, strong up day. This gap may not be closed. Why? Because it's below the neckline. You're not supposed to go back below the neckline. If we do, and we come down and close the gap and then pop back up the same day, okay, I'll go with that. But I don't want it to close below the neckline. That's the worst thing you can do with the head and shoulder pattern. So maybe we've got a momentary high for several days, a week, something like that. Maybe not. I'm not quite sure yet. But this is so far right out of a textbook classic breakout head and shoulder pattern, looking real good. Now, the head and shoulder has an upside objective on the 10-year notes of 116, almost 117. And its double bottom upside objective would be 124. Similar number to, no, not one. Okay, 124 for the notes, period. All right, crude, crashing. Huge down move for the last 2 days. I don't think too many people are going to complain about that. Gas prices should, come down quickly. Percentage-wise, I doubt that it's going to come down as much as a percent of break here in the crude. You realize just a few days ago we were at 72, and now we hit 60 and a half. We went from 70 to 60 in 3 or 4 days. That's a lot. Yes, we're oversold. Yes, we're hitting a support area. Yes, I think it's about to bounce. Next, heating oil. Same general type of commentary, but here I have to erase my head and shoulder bottom at the moment because this break does not look like it should be part of a head and shoulder bottom. I'll put these markings back again if we just start to go straight up from here, which I doubt, because this could be lower than I thought and a little bit longer, taking longer than I thought to create a last shoulder low. It's not too low, but it's getting awfully low. I do like the fact that it's oversold. I do like the fact that it's coming near support. And those comments lead me to believe we're going to have a bounce. But the level and the timing doesn't look like it's part of a head and shoulder bottom. Unless, of course, it gets a lot stronger than I expect here in the next couple of weeks. Then I'm going to start talking about the pattern again, way before it breaks out. I'll leave my little measuring stick here on the very far right edge. I'll leave it on the chart just to remind me. But let's hide it. There we go. Next, natural gas. Not much of a break, but this is acting just perfect with the head and shoulder top that I've been outlining now ever since it started to break out and the pattern became visible. And that was basically in March 20th. So we broke the neckline the next day slowly, dropped off a little slowly, and then made the lowest low so far. Bounced, came back up to the neckline. Now, I just got through saying you're not supposed to go above the neckline or cross the neckline once you're on the other side of it. This did that, but the closing price is the most important, and it closed below the neckline on the 31st. Dropped off a little, came back and tested it again yesterday, but now we're making new lows for the last 4 days for the week with a chance, with a chance of having a new low closing price since the initial breakout. That would be great. And there's also a chance it could even make a lower low and have a new low since the breakout. Classic. Great. So nothing is wrong with this pattern so far of any consequence, just a little rally above the neckline. And the minimum downside objective should be 2.9, a little below 3. I like it. What's wrong? Nothing. Next. Big break on gold. Not sure why, but it's doing it. We did get very overbought. I talked about being in, rarefied air here, close to 90. Markets rarely get on daily data charts above 90 on RSI, very rarely. And when they do, I hate to use the word guarantee, so I won't. It's almost, okay, a break. You just do the research yourself, take a look at daily data charts going back years, and see what happens when you get at a really, really high level on RSI, or stochastics for that matter, oscillators in general. And they will break down really substantially, but they don't happen as often as we'd like. Good signals. But this one looks like it's doing it. How far down we're going to go? Well, my first objective has already been fulfilled today. It was down to about 30.33. Next one is not too much lower at about 3,000 flat, up $1 or $2 from there. Yeah, almost exactly. But the real one I think we're going to hit is going to be 28.81. And by that point, we're going to be oversold. In the midst of the decline, we probably will have a little bit of a bounce or a rally, taking about a week or two, maybe even 3. Next, silver. Wow. Really huge crash. You realize that silver in just a couple of days has gone from a test to the previous important highs back in September, or was that October, I meant. We're almost made new highs since October for a long-term bull trend. And in simply 1 week or so, we are now making new lows ever since September of last year. Huge break for a very long period of time. Now, again, we're very oversold at 16, at or a tiny bit below a support level. I think we're going to be about to have a bounce back up to probably, at least 30.33. I would think 31 and maybe even a bit higher. I wouldn't even rule out something like 32 and a half. But this is, how shall I say this? Too much, too quick? Next, platinum. Pretty much the same story. New lows for 2.5 years by a little bit. We are oversold at 21, not too severely, but oversold. At a historical support level or a hair below it, too much, too quick. I think we're about to bounce up to 952-ish. Minimum, 925, 26, 27, 28, 29, 929. Next, high-grade copper. Same story again. In just a matter of a week or so, we went from testing previous highs for a double top and all of a sudden crashed like crazy, and a new low for a couple of months after being at the highest highs for many, many months. This is too much, too quick. We are extremely oversold at 13. There is room to go down a little more, but I do think time-wise and price-wise, we should be very close to a low. That goes for all of the metals. Next, and some other markets. Soybeans. Boy, oh boy. All of my long-term bullish stories are dwindling quickly. And I'm concerned that the grain markets could have an all of a sudden huge break to the downside. We are challenging the lowest lows, not even oversold, getting very close. So there's a chance it could bottom out again. We're testing a second, third test of a previous bear trend line. First, we broke above it convincingly October 13. Came down, first test of it, October 16, bounced off the line. Came down, tested it again. March 4th, bounced off of it, tested it again today. Maybe even a little lower we could get. There's a horizontal support area. There's an old bear trend line support as you go down. And we're extremely close to oversold. So maybe we're about to bounce. But if we can't, and it doesn't go anywhere, all the technical resistance above the market is a problem. We'll see what happens. I'm not liking my bull story that much at the moment, I'll tell you that. Soybean oil. Challenged previous highs, got way up there, resistance, and a resistance zone, let alone a price level besides the zone, and turned around just in the last 2 days. Now, there's nothing really wrong about this pattern so far. You've got a double shoulder, you got the head, and you got the double shoulder, and we're still way above the last shoulder low, which had a bullish engulfing just before it started to rally a lot. So soybean oil is touching support, only about a 50% retracement on this last 2-week rally. So this looks like it's in pretty good shape still. It's also bounced 50% of its break today so far. It's in the best condition of the meal and the soybeans. So here's meal, terrible. It is oversold. It could have a bullish engulfing if it can get above yesterday's high. By the way, I just noticed on one of my other screens, we just made a new low in the E-mini a few minutes ago. So there's another new low for the break. Now down a little over 282-ish or 28 big S&P points. Not stopping yet. Back to meal. Soybean meal. I could languish around these price levels. I don't know if I'm going to get that bullish engulfing. It's really got to get above 310 in order to perk my longer term bullish interest. This is too many days, too low, below previous lows, staying that way, looks bearish. What can I say? Soybean meal looks like it's a long term bearish breakout. Hate to say that. Not good for farmers in general. Consumer, I suppose, tofu, but that's what it looks like. I can't help it. Soybean meal could come down a tremendous amount. I guess I'm going to have to say something in the ballpark of the low 200s, and we're 285. I hope I can change my mind, but so far I can't. Corn, and that does not necessarily jive with the other markets, so something's not fitting the overall picture very well. Corn had a bullish engulfing yesterday. Great. The drop today did not get below yesterday's low, did not cancel out the bullish engulfing, and it is higher on the day by a small amount at the moment. I would like to see an update on that tick. There we go, up 3 cents on demand, up 2 3/4. So it's behaving nicely. Nothing is wrong here. I think the last shoulder low, which is a double bottom with a Ehrlich reversal, buy signal, ER signal on March 28th, and another one yesterday, is not that rare, and it often is the beginning of a good, strong rally. Let's see if it can do the trick. The small double bottom since March 4th, for about the last month, has a minimum upside objective, which would test the neckline on the bigger pattern. Now, the bigger head and shoulder has a bullish engulfing ER buy signal naturally on the low February 26th. Then we have a small head and shoulder bottom that has already worked that I outlined at the time. That pattern, July last summer, and the head August, and then the last shoulder October, worked fine. It's all said and done, but the pattern itself was the head of the larger, bigger head and shoulder. So now we have a little double bottom with the last shoulder on the large pattern, which is approximately 13 months long. Pretty big, 1 full year plus a bit more. So I got nothing to say bad. In fact, with all the other bearish activity around, this is not being affected so far bearishly at the moment. Good. What about wheat? Nope. New lows being almost new lows. We haven't had any major rally that's made new highs for an extended period of time. All of the important rallies have been at lower and then lower and lower levels for the last 3 years since the war broke out, and that historical high on March 8th of 22 was a bearish engulfing ER sell signal, one of the most spectacular ones I've seen in decades. Spectacular. I think it was a double limit move from limit up to limit down. After screaming multiple limit up days in a row, expanded limit up days. In fact, locking limit up on the opening and staying locked limit up all day long toward the end, exactly like the Russian grain deal tops in 72 and 3. I forgot which year it was, but maybe 73. It was a blow off top in spectacular 4th of July fashion with a sell signal on the high day. But we don't have a bottom yet. I've got to rally above recent rally highs. I've got to get some reversals. I got to get some kind of pattern to hold on to. This does not, it looks like soybean meal. Does not look like it's starting to bottom out. All I got is a little bit of an oversold condition, and that's not a good enough reason completely yet. If I was to get a rally all the way back above yesterday's high, you're going to get a green bullish engulfing. That would please me a lot, and I'd start talking about much more of a rally, but it's not happening. Okay, cattle gapped down. So I'm expecting a rally soon, back up to 203.77-ish, closing the gap. There's no collapse here of a bull market. We've only got a sell signal on top, a little bit of a double bottom, top I meant, and that predicts a move down to, I'm going to ballpark it real quick. Oh, I don't know, 191 and a half. And that support area is down here at 190. And I think we could get down there. So I can't be long-term bearish, a little bearish short-term. We're not oversold yet. But remember the gap, rally up, close the gap, and then got down to 91, 92, 90 flat, 190 flat. Hogs, sideways, doji, could care less about what's happening around it. Going sideways, and I haven't had much to say, and it hasn't done anything for the last week or something. So I'm going to keep my mouth shut until I can say something I think is going to work. Here's the two stocks. I got Shell, S-H-E-L, and it collapsed yesterday and a hugely larger amount today. You realize this is only a week ago, it was trading at 74, and we hit 64 today. That's a $10 break on a $70 stock. Very big decline. There are two gaps to close. So I think we're going to be coming back up to close them within the next few weeks. But that's pretty much a stretch. This is a tough one. It's been a long time since I've seen this kind of activity, most recent with COVID a few years ago, and then you got years before that, and so on. So we're oversold, yes. Substantially so, yes. Does this usually start a rally very soon in time, and we're probably pretty close in price? Yes. But pinpointing exactly when and what price, tricky. Oh, look, I didn't see that until just now. There's an old gap to close at around 63.33. And it's only another dollar lower, considering we're down on the day, what, $5.50 already. So that's plausible. Yeah. The next support level would be 60 and a quarter, two major previous bottoms. Let's see what happens. Apple, gaps to close above the market, gapping down here, broke some support that was a while back, last August. There's not any significant price level that I can come up with that tells me that we're at a bottom right now. I can say that 18 is quite oversold. It might get a little bit lower before it turns around, but I do think it's close in time and price to turning back up. Maybe it'll just get crushed here and get down to 176 before it goes back up to close an old gap from way back here. Don't have a solid grasp on that. Sorry, things are a little bit wild, to say the least. And going back to the E-mini real quick. Here we go. We made a little bit of a new low about 9 minutes ago. A bounce. Again, I really want to see 52.80 something on a closing basis at least, or higher, in order to talk on Monday about today being some sort of a low. Otherwise, I can't. This is still stair-stepping its way down. You guys have a great weekend and profitable trading to you.